Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is May 26, 2022, and today is Thursday morning. So looking at the highlights of today, JP Morgan stock climbing higher quite nicely. We're going to take a look at that in just a second. But first, looking at the major economic events scheduled for today at 2:30 South African time out of the United States, we have a preliminary quarterly GDP, that's gross domestic product numbers coming out. So looking at the various markets, starting out with the Forex symbols, the euro, the British pound, and the Australian dollar, all steady after climbing quite nicely and keeping onto that trend. Now looking at the indices, the Dow Jones and the NASDAQ rally higher. I'm going to take a look at it in just a second. Looking at commodities, gold breaks down while oil remains unchanged. In terms of the stocks, Facebook did have a massive gap down, but it did inch higher yesterday as it's trying to make back some real estate. Lastly, looking at cryptocurrencies, Bitcoin is dead. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're going to look at a 4-hour chart of the Euro USD, and look at that. We had this massive, nice rally at the top, okay, all together. A nice rally from 103 all the way up to 107. That's a 400 pip move. I don't remember since we had a 400 pip move, in the past 4 years. I think within the last 5 years, 6 years, even from when Donald Trump became president in 2016, 2017, was it? Yeah. Since then, we were in a very tight range on the euro. I mean, maybe per year we went 400 points, right? 400 pips. And now look at it. And just less than 2 weeks, we've, completely broken down, okay, from what happened with the war in the Ukraine. And then we're making it back. Okay, so let's look at a daily just to give us perspective. Okay, we were at 111-ish before this debacle. Okay, we did trade down to 103. So between the two, you have about 8 points. Now, usually the market bounces 8 points above that. So, in between that, that's 400 points. So we're right there. We're about 50%, okay, bounce. And that's what I would have expected it. To be at that 50% bounce would be where I would have expected us to be right now. So that's where we are, and that's a good sign, okay? Now, does it mean that we're going higher? Not necessarily. Does it mean we're going back to the lows? Not necessarily. We may just find ourselves in a new footing for now. So that's where the euro is standing right now. GBP USD also doesn't have as a steep incline like the euro does, but does make some real estate back. Lastly, looking at the Aussie dollar, also making some real estate back, okay, but again, not as sharp and not as severe as the euro USD. Okay, so just keep that in mind for now. Now, jumping in commodities, gold broke down to 1844 after hitting 1870. That's also normal. It's okay. On a 4-hour chart, we are breaking both moving averages, so that's raising a signal. But on the daily, if you see, we're hitting that 30-day moving average, so that may be a catalyst for us to bounce from here. Okay, so just keep that in mind as this is also happening. Now, looking at crude oil, looking at a daily, not doing much. I mean, if we look at a 1-hour chart, you could see pretty much we're at the top of the range. Not breaking higher, not breaking lower, just steady, which is a good thing for oil as we're going into the summer months as well. Now, looking at the Dow Jones, yesterday we had a decent rally up to 32,000. Okay, we did make some real estate back, like I said. We're not there yet. Okay, at 34,000, where we were at the top right before this debacle. Okay, that was when the Fed came out. If you guys remember, the Fed came out and said, hey, listen, we're going to increase interest rates. The markets rally over 1,000 points that day. And then the next day, the markets tanked over 1,000 points, right? That's this little spike and correction that happened in the market, right? And then we sold off quite aggressively, quite again, a little bit of a bounce, and then another sell-off, okay, bottoming out at 31,000, excuse me, and then bouncing above it, okay? So between 31 and 34,000, I would say our midpoint would be 32,500-ish level right here. So my target is right here, okay? I'm hoping we get there, okay, as we're trying to climb ourselves back out of this situation. And we may see ourselves in murky waters when again, but for now, we are bouncing above it, okay? So just keep that in mind as we're going into today's number as well. Now, looking at the individual stocks, not doing much altogether. Apple didn't do much yesterday. Facebook did climb higher, okay, even though it shows at the end of the day it did sell off, but it did climb higher from 178 up to 183. That's a decent climb for yesterday's move. If we look at Microsoft, also did climb higher, but again, nothing to really write home about in terms of its move on the upside. Now, looking at JP Morgan, this is where it becomes really interesting, okay? Look at that. It was a gap up and go to 127 from 116-ish level. That's a big move, okay? That's an 11-point move for a heavy stock like the JP Morgan, which is a major bank in the United States, major financial institution in the United States. This is really a very important thing that it's happening. Now, lastly, looking at Bitcoin. This is not tradable. I mean, could you believe it? Bitcoin is not tradable. We're looking at a 50-minute chart, and we're trading between 29,800 and 29,500. 300-point range. That is what we call watching paint dry. Okay, so stay away from this right now until it breaks either above the 30,000 or below the 29,000. Give me something, okay? But trading at this area is a little bit painful, to say the least. Okay, so just, focus on the American stocks, especially today, going to this GDP number that's coming out, as opposed to putting your energy and time and investment into something like Bitcoin until it does change some sort of character. This is Razak, and I wish you guys a great trading day. Thank you.